Have you ever looked at a stock chart and just thought, what on earth am I even looking at? It can feel like just a chaotic mess of lines and colors, right? Well, today we're going to decode that chaos. We're going to find out how these little shapes, called Japanese candlesticks, are actually telling a very human story of fear, greed, and the battle for control. And hey, by the end of this, you'll be able to read that secret language of the market yourself. So, take a look at this. To the untrained eye, it's just a jumble of red and green. But what if I told you that this isn't random noise at all? It's actually a super detailed narrative, a blow-by-blow account of a battle being fought every single minute of every day. The real question is, how do we learn to read it?
Well, the very first step is to learn the alphabet. And in the language of the market, the letters are these individual candlesticks. Each and every one of these little shapes isn't just a data point, no. It's a miniature story of conflict, a little snapshot of a struggle for control.
And that struggle is always between two opposing forces. You've got the buyers, who we call the bulls, trying to push prices higher, and then you've got the sellers, the bears, who want to drive prices lower. Every single candle you see is the result of one of these battles. Our job is to figure out who won, who lost, and, how intense that fight really was. Okay, so each candle tells its story using 4 key pieces of information. That thick part, that's called the real body, and it shows you the distance between where the price opened and where it closed for that session. And those thin lines poking out the top and bottom, we call those shadows or wicks. They're absolutely crucial. They show you the absolute highest and lowest points the price hit during that session's battle. So, how do we know who won? It's actually pretty simple. If the candle is green, it's bullish. That means the price closed higher than where it opened. The bulls were in control. If it's red, it's bearish. The price closed lower than it opened, meaning the bears won that round. And the size of that body, that tells you just how decisive the victory was. A big body means a knockout punch. All right, so we know the letters of the alphabet. Now let's start forming some words. We're going to look at specific combinations of candles, patterns that act as really powerful signals. We'll start with the bullish reversals. These are the patterns that pop up after a price has been falling, and they suggest the buyers are finally starting to fight back. First up is the hammer. It's called that because, well, it kind of looks like it's trying to hammer out a bottom in the market. You've got to notice that very distinct shape, a small body way up at the top with a really long lower shadow. This shape tells a very specific and pretty dramatic comeback story. Let's break down the story this hammer is telling us. So the session opens and sellers take immediate control. They push the price way down. That's what creates that long lower shadow. But then, right at the low point of the session, the buyers step in with overwhelming force. They totally reject those low prices and drive the market all the way back up to close near where it opened. It's a story of a powerful rejection and a huge potential shift in momentum. Next, we have the bullish engulfing pattern. Now, this is a 2-candle story of a complete and total takeover. After a bearish candle forms, a massive bullish candle appears that completely, engulfs it. It actually opens lower than the previous day's close and closes higher than its open. It's a huge statement of intent from the buyers. I mean, just look at the psychology here. The sellers had their moment, right? They pushed the price down in that first red candle, but then in a single session, the buyers not only reversed all of the sellers' progress, but pushed way beyond it. It's like the sellers' efforts were completely wiped right off the map, signaling a really powerful potential reversal. Okay, now for a 3-part story, the Morning Star. This one unfolds over 3 different sessions. It starts with a big bearish candle, then it's followed by a small, kind of indecisive candle, and it finishes with a big bullish candle. It's a classic tale of despair, then doubt, and then a brand new hope. Looking at the chart here, we can see that story play out. First, that long red candle shows the sellers are firmly in control. Then you see that little middle candle. This is often what we call a doji, and it signals pure indecision. The momentum has totally stalled. The market is holding its breath. And finally, that strong green candle shows the buyers have seized control. This pattern is kind of like the sun rising after a dark night, which is exactly why it's called the Morning Star. Of course, what goes up can also come down. The same logic we've been using just applies in reverse. Bearish reversal patterns are signals that an uptrend might be ending and the sellers are about to take over. And a lot of times they are pretty much mirror images of the patterns we just looked at. First up, we have the shooting star,
which is basically the hammer's evil twin. Imagine seeing this at the very top of a strong uptrend. The buyers, they're full of confidence, they try to push the price even higher, and that creates that long upper shadow. But they run out of steam. Sellers see an opportunity, they rush in with force, and they reject those higher prices, slamming the market back down to close near the open. It's a really powerful signal of buyer exhaustion and a potential top. And here is the bearish engulfing pattern, another story of a complete takeover. You see a solid bullish candle suggesting the uptrend is just going to keep going. But then, the next session opens higher and then reverses with incredible force, creating a massive bearish candle that completely swallows the previous one. It shows that sellers have stepped in with just overwhelming strength, not just erasing the buyer's gains, but signaling a powerful new move downwards. Now, this is maybe the most important part of this whole explainer. Seriously, just identifying a pattern isn't enough. A word out of context can mean almost anything, right? To truly understand the market story, we need to read the full sentence. We need context. This quote from trader Alan Farley says it all. The patterns themselves are powerful, for sure, but their real meaning comes from where they show up on the chart. Their location can turn a whisper into a full-throated shout. So how does this actually work in practice? Notice where this shooting star forms. It's not just anywhere. It's happening right at a major resistance level, a price ceiling where we know sellers have shown up before. The candle itself signals that buyers are failing, but the location tells us they're failing at a historically difficult spot. This combination of the pattern and the place, we call that confluence, makes the signal incredibly powerful. So think about it. We've gone from individual letters, the candles themselves, to forming words with patterns, and now to understanding full sentences by adding context. By seeing candlesticks not as just abstract shapes, but as visualizations of market emotion, you're literally becoming fluent in this powerful language. Let's quickly recap the big three ideas. First, every single candle tells the story of a battle between bulls and bears. Second, key patterns like the hammer or the shooting star are like bolded words, signaling a major potential shift in the story. And finally, and this is the big one, context is king. A pattern showing up at a key level, like support or resistance, is the most important message you can get. So the next time you look at a chart, don't just see lines and colors. Try to see the battles, see the psychology, see the story that's unfolding. Now that you know the basics of the language, what is the market telling you?